Many homeowners are thinking of taking advantage of the home equity line of credit. And there are three things you need to know when thinking about maximizing the benefit of the home equity line of credit. But one of them you might not be expecting actually catches most homeowners off guard. And I don't want you to make a costly mistake while thinking about making a plan about the home equity line of credit. That is why I have created this video to guide and educate you about the proper way the home equity line of credit can actually benefit you. By the way, my name is Olajide Okonola. I am your Fraser Valley go-to realtor. And if you want to know anything about buying, selling, investing, or actually moving to the Fraser Valley area, please feel free to check my description below. You can email me, call me, text me. I will be glad to set up a private conversation about how I can guide you to make a well-informed decision about your next real estate move. You might have heard so much and done some research about what we call the HELOC, Home Equity Line of Credit. And in this video, I will be diving deep to teach you the practicality of the home equity line of credit. You will be able to have a choice and know what options you need to take. I will be doing some calculations as part of this video. So I've helped lots of sellers and home buyers to make informed decisions in the real estate. So today, as we go into this topic of home equity line of credit, let's start with the basics, right? What is an HELOC? HELOC is called the home equity line of credit. The home equity line of credit allows homeowners to borrow against their home. They have built up some equity on their home and they needed to cash out some little funds. So equity is the difference between the current market value of the property and the loan they are still owing on your mortgage. The difference is what we call the equity. Okay? Now, as you pay down your mortgage every month, the principal is going down. The value of your home increases, right? And your equity grows in that process. So this equity, therefore, is tapped into through the home equity line of credit. That is the only way through which you can take advantage of that excess between the market price and the loan that you are still owing on your home. Now, let's quickly discuss how the HELOC works. How does it really work? Many people don't know exactly how it works, and I've been asked many times. So that's why I'm taking time to break this down so that you can have a good understanding of how home equity line of credit works. So typically, HELOC come with a draw period. Now, during this draw period, you can borrow money, right? And there is also a repayment period during which you must pay back what you have borrowed plus the interest. You got it? So you it's not that you have the cash, but you have access to that fund and you can use it anytime. So during the draw period, which can last up to 5, 7, 8, even up to 10 years at times, you can borrow funds as needed up to a predetermined limit, depending on the current value of your home. You only pay interest on the amount that you borrow each time. You don't even really have to pay any interest until you use that portion of the home equity line of credit. It's like you having a credit card and line of credit, and you are only charged for what you use. So once the draw period ends, then the repayment begins. During this time, you can no longer borrow funds, and then you must pay back both the principal and the interest that you have owned. Quite simple. This is exactly how the home equity line of credit works. Now, let's look at the pros and cons so that you'll be able to decide if this is actually right for you or not. One major advantage of the HELOC is that they are very, very flexible, and you can use the funds for various purposes, such as home renovations, debt consolidations, or any family emergencies. The fund is always there. You can tap into it. Plus, you pay interest only on the amount that you borrow, right? I will give you further details when I do the rate calculation on the other side of this video. So, however, I want you to know that it is very, very essential to understand the risks. HELOCs are secured by your home. Failure to pay back could result in a foreclosure. This is what I want you to know. Additionally, variable interest rate can make monthly payments unpredictable. So you have to watch out for that. Therefore, before applying for any HELOC, make sure that you have a good understanding of the terms and carefully consider your financial situation. This is the very first point I tell anyone. Always assess your financial condition. Your financial situation will determine how you proceed with either refinancing or HELOC. So, is home equity line of credit right for you? That is the question. It depends on your individual needs and financial goals. I will advise that you consult your financial advisor to determine if HELOC aligns with your plan at this time. I hope you have some great understanding of what this HELOC is. Thanks for watching. I will now be going ahead to give you the mathematics of how we calculate the home equity line of credit so that you can know how much exactly you can use from your home equity line of credit and when you can tap into it. You'll be able to calculate it by yourself